Chibi Circles with a quick update on March the 14th. So this market correction started nicely, but when I started trying to forecast a counter trend bounce, well, then I underestimated the bearishness here. There could be different ways of explaining or interpreting this, but you know, mostly I look for, or what I observe is or are ABC formations, and these corrective moves, these ABCs, they can have many different shapes. They are in essence the same, but you can have a double top, or you can have a sideways consolidation, you can have a triangle, and so on. You can have different formations, and well, I think one way of explaining this is, as you see, the market has met my downside target for this whole correction, and already in this first move down. So this could mean two things. Either this is even more bearish than I thought, we will get the bounce B and then a deep C move down going much lower. Or perhaps we have taken out the downside target and now we'll make just maybe a double low and then we rally. So yeah, we had this double top setup and we have met the downside targets. And this original scenario here in red, I think that is of course no longer valid, but maybe we are looking for something like this now. So let's have a look at some stuff. I have my wavelets. Well, starting with my scenario. Here originally in yellow, I expected the bounce from around Friday, Monday. Actually, the average had a low on Monday, so I should have said Friday to Tuesday. So that was a subjective estimate, Friday, Monday. A more objective would have been around Monday. But we continued down even after Monday. But as you see, my scenario here actually allowed for that, although we even broke lower than this band I have made. And looking at the historical analogs that are the source for this scenario, they suggest something like this indeed has happened before, and the likely outcome is what I have drawn in blue here. We have started the bounce today, and it should continue to around Wednesday, and that's the Fed meeting, I think. There is even a possibility we could rally beyond that Fed meeting, but my main scenario is we make a top around Wednesday, and then we drop down to make maybe a double low. We could break lower to make a lower low, but this may be a bear trap. I don't expect us going lower here. So we could make a low already around Monday the 24th, or we could continue down all of this week into a lower low later that week. And looking at my wavelets, as you see, we have pretty much already taken out my downside target. And for using bull market rules, I have this rectangle, placing it at the wavelet top, and it says, well, actually we are 1 day away from where I should go long if bull market rules apply. Yeah, well, maybe we should go long here. But then this has been quite a bearish correction, then maybe it's the bear market rules that apply, and they say, well, you should still wait 1 or maybe even 2 weeks before you go long here, and that would be around end of March. So we will have a better look into that, but first some cycles. Let me see, I have it here. I have the 17-week cycle in red, and I have the quarterly cycle in green, and these purple boxes are they are the 10-week oscillation. So I have, well, you can see both cycles have a low around January. We made a low, and both cycles kind of have a low around early June. And I think in this period we will see two of these 10-week oscillations, and currently we are approaching the end of this first one. I think maybe we should look for some kind of a double low. Then we will start another 10-week oscillation, and I don't think we will go up and make a new all-time high. I am looking for a lower shoulder, and on the next leg down we will get confirmations of this is a bear market, and that could create some panic. Then we should have a summer bounce, and then we should have, you know, the normal weakness in the fall with a low around October. So that's my cycle outlook. And looking at the hourly data for Dow Jones Industrial, we have a steepening of trend with these white trend lines, and this last move I'm seeing 3 drive bottom formation down, meeting resistance, a lower low, breaking out, but back testing, and with a lower, even lower low, and then we'll rally. It's like this bigger bottom formation at the previous correction. Up resistance, lower low, breaking out, but back testing with an even lower low, and then we are clear to rally. So the 2-week oscillation in yellow is kind of working. It has not been great since, well, for many months now. And you know, it did look like we were ready to rally here a week ago, but we are almost kind of inverting this 2-week oscillation. And that's when I discovered this, what I call the mystery magenta. That's like a 3-week oscillation. And indeed, we made a low exactly at that point. So what else do we have here? Well, looking at the wavelets, it does look like a very good bullish setup, and we are extremely oversold. So this is my oversold indicator, and looking at historical data, we are very oversold. Actually, when we go back and look at hourly data back to 2008, there are only about 1, 2, 3, 4, 5, 6 analogs that has been this oversold. You know, that's pretty crazy. And let's have a look at what does the market do when it gets this oversold. And so, you know, this one is oversold all the way down here. Goes my indicator. So this one is just a couple of months ago, and as you see, we did make after this first oversold condition, we made a sideways bottom formation, almost like a double or a triple low. So going back to this one, we see here we made, well, that was a lower low, and here this one, it was kind of a double low. Starting to see a pattern here. So the COVID crash is different. And well, we kind of have this one making kind of a double low, and these two are kind of strange. That was around 2013, I think. It's kind of strange that my indicator gets this oversold at these 2 points. And here we just rallied, no bottom formation. Then we have the 2011 crash. Here we got even more oversold. it's kind of a different situation.